All right, let's talk a little bit about Nvidia, because Nvidia beating fourth quarter expectations, revenue surging 78% from a year ago on strong AI demand. Now the chipmaker also issuing strong guidance for the current quarter. Joining us now, we have Antoine Chkaiban. He is a New Street Research Technology Infrastructure Analyst. Antoine, it's great to have you back here on Yahoo Finance. So we are seeing some gains here ahead of the open. Of course, this comes following the initial drop that we saw on the results yesterday. I'm curious how you're making sense kind of that knee-jerk reaction maybe that we did see and your assessment of the quarter.
Thanks, Seana. Thanks, Brad, for having me. Great to be back on the show. I would say, our key takeaway here is that Blackwell is ramping very fast. 11 billion sales in the quarter. That's well above our expectations. That's well above what the company guided for last quarter of several billions. And I think that's what the street likes in the print. It means that Hopper revenues are declining overall sequentially. But the most important takeaway here is that it dismisses concerns of a slow, of a backloaded year. There were a lot of concerns in recent months, in recent quarters, around Blackwell being slow to ramp, around some challenges in ramping the rack level system that's really pushing the boundary of innovation. We're talking about really complex systems here, and I think investors were worried about that. And now you see the company printing 11 billion sales of Blackwell in the quarter. That completely dismisses those concerns, because now we expect in the next quarter probably sales of Blackwell approaching 20 billion revenues. And that's going to more than offset, of course, Hopper coming down. So I would say that's the key takeaway from the quarter here.
And it seems like they're really leaning on these different configurations of Blackwell to drive some of the margins going forward. If we can get real nerdy with it for a second here, what does that configuration set and the broader kind of ecosystem for Blackwell look like here, especially as they're trying to make sure that they can extract more margins to impress investors long term who may not have been impressed on the initial release of the results?
So as you know, up to now, a GPU system, consisted in 8 GPUs, a GPU server, what Nvidia has been calling, like a DGX and HGX, comprised up to 8 GPUs. And as we're moving to Blackwell, we still have the option to have an 8 GPU server, but now you also have a 36 GPU server. You also have a 72 GPU server. And you can, use different types of networking to connect these 72 GPUs or these 36 GPUs, and you can water cool them, you can air cool them, and so that makes, of course, the ramp of that new generation much harder. And so it's no surprise, that gross margins are coming under pressure, and we expect things to improve throughout the year as the product ramps. But actually, over the longer run, these chips are not getting any less complex. As you think, about Rubin and its successor, we expect a lot more high bandwidth memory, which is this memory where the chip can really exchange data with the memory at very, very fast bandwidth, very, very low latency. We expect more of that in the subsequent generations, and that's going to keep driving gross margins down in our view. That being said, revenues are going to grow so much, and Nvidia is going to be able to extract leverage on OPEX in a way that's still going to drive very, very strong earnings growth. So we're not concerned about any of that.
Antoine, talk to me a little bit more about just the earnings growth that you are expecting in the quarters to come. And I want to play a quick soundbite that we heard from CEO Jensen Huang, Nvidia CEO Jensen Huang last night, talking about Blackwell Ultra and the impact that he sees that having here in the second half.
Blackwell Ultra is second half. As you know, the first Blackwell was, we had a hiccup that probably cost us a couple of months. We're fully recovered, of course. The team did an amazing job recovering, and all of our supply chain partners and just so many people helped us recover at the speed of light. And so now we've successfully ramped production of Blackwell. But that doesn't stop the next train. The next train is, is on an annual rhythm, and Blackwell Ultra with new networking, new memories, and of course new processors, and all of that is coming online.
Antoine, I bring up that soundbite there in the context of what you were saying earlier, just in terms of the fact that you thought Jensen Huang was able to alleviate some of those concerns surrounding the delays and maybe the impact that is ultimately going or initially had on Nvidia. How do you see, how strong is Nvidia's pricing power still here in the quarters to come?
So I think the pricing power is going to remain very strong for the foreseeable future. You don't really have much competition out there that can match Nvidia. You have AMD that's like more than an order of magnitude smaller today, and who's struggling to ramp more than like its two very large customers, Microsoft and Meta. And then you have ASICs, you have in-house ASICs, and so far you only have one hyperscaler who's successfully ramped, like the TPU, and I'm talking about Google, of course. They've been working on that project for 10 years, and it's no easy task. It's not only like designing the chip, it's also designing all the software on top of that to make a good use of that chip. It's also making a chip that's flexible enough so that it can adapt to all this change, in the workload. That's like all these AI models introduce new technologies from one generation to the next. Now we're talking, about 3 scaling laws. You have like a reinforcement learning that comes into play. All this variation is easily handled by GPUs. It's much harder, when you have like a chip that's more dedicated. And so bottom line is that there isn't that much competition today. And so we expect NVIDIA's pricing power to remain very strong. And if the gross margins come down, it's simply reflecting, first in the near term, of course, the Blackwell ramp, and over the longer run, as I mentioned, like increasing content of memory inside these chips, but nothing to worry about.
Antoine, we only got about 15 seconds. Even with the move here that we're seeing pre-market, NVIDIA will still be down year-to-date scale here. For investors trying to figure out before the opening bell and going into the start of today's trading activity, if it's an investable company at this level on that pullback, what would you tell them?
I would just tell them that we're moving, so 2025, I think is fairly well framed, We have sequential growth that's going to be like in the mid-teens. We expect 200 billion data center revenues for the year. That's consistent with the supply chain on one side. That's consistent with hyperscale capex on the other side. All the hyperscalers have raised capex significantly, and now we have like a consistent view of 25. I think the debate is shifting to 2026. And in 2026, you're going to have a handful of players who are going to move from clusters of hundreds of thousands of chips to maybe 500,000, on a trajectory to 1 million by 2027.
Right.
That's enough to drive all the growth that is going to, be enough for Nvidia to approach, $6 of EPS, and on today's stock price, I think is pretty cheap when you look at this in that perspective.
Antoine, thanks so much for taking the time here with us reacting to Nvidia earnings.
Thanks for having me.